Yo, it's your boy Coinstock back at it again, stuffing these duffel bags and collecting that cheddar. Before we begin, please don't hesitate to like, comment, and subscribe. Also, disclaimer, I'm not a financial advisor, I'm just a friend trying to educate you. Alright, you know what time it is. It's time to get into that news, boy. Alright, brethren, but first, we gotta look at what the market's overall looking like, and it looks like it's, in the past hour, 0.4% in the green and negative 1.4% in the red for Bitcoin at least. But all in all, it's looking pretty nifty, right? And I'm heavily into Polygon, so I always look at Polygon for sure. It seems like it's going up and up and up. Don't know why, don't know what the news is, but yeah. Oh yeah. If you want to skip around on the news, the timestamps are in the description, so take a peruse there. But let's go ahead and look at the first bit of news. So, 48,000 BTC Bitcoin withdrawn by institutions from Coinbase. Crypto Quant CEO expects price surge. All right, let's look further into this. So the CEO of South Korean analytics company Crypto Quant, Ki Young-ju, I don't know if I'm butchering that or not, has shared a screenshot showing a massive withdrawal of Bitcoin from the largest US-based exchange, Coinbase. This transaction took place on October 18th. So he said that all this crypto was shifted off of its wallets by financial institutions. This is the equivalent of nearly $1 billion at the current BTC/USD exchange rate. Now, I made a video yesterday covering that there were other exchanges that these BTC were being pulled out of and put into people's personal wallets. And this is really, really a good thing for sure. I'll link it in the probably up top or maybe in the description. I don't know yet, but excuse me. But this is actually a pretty bullish news that's also coming out of Coinbase as well, especially from institutions, right? I think these financial institutions are actually handing these out to their clients, but we'll see. Let's continue. An earlier post from a Crypto Quant analyst shows that the withdrawn BTC had been held in Coinbase Pro for a period of 3 to 5 years, so this Bitcoin can be called dormant. All right. And they're split into 3 lumps, 11,280 BTC, blah, 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 blah. You can see it. So CEO Ki Young-ju, still don't know if I'm butchering that, tweeted that this Bitcoin was delivered to institutional clients. So it was. He also attached a tweet from October with a screenshot showing that historically, the Bitcoin price showed a substantial rise after financial institutions entered Bitcoin. Apparently, he expects the price of the flagship crypto to shoot up once again now after this withdrawal from Coinbase. So basically, these institutions are coming in. They're coming in, right? They're like, dang, I need to get my hands, dirty. I need to get my hands filthy in crypto, right? And that's what they're doing. That's what, we saw the price shoot up. Well, not only that, because also the having that's just inevitable. I mean, I'm not a financial advisor or anything, but, it's inevitable. But now they're pulling them out of these exchanges, kind of quote unquote, air quotes, losing their ability to like readily trade it, right? So now it's really setting in the hodling. So, I mean, that's bullish news for Bitcoin, right? Hold on. Let me close that out. All right. So just then 48K BTC flowed out from Coinbase today. Looked at the transactions, and it seems they broke the old piggy bank to deliver Bitcoin to institutional clients. And there's the exchange outflow total from Coinbase Pro. And you can see right there, and also right there in like May or around May, June, So BTC price now is close to the estimated entry price of institutional investors who have been using Coinbase services like prime brokerage, custody, etc. If you still believe institutions drive this market, this bull opium could work for you. And then boom shakalaka, you can look at that. Like all the sources, links are going to be down in the description if you need them, if you want to read this for yourself, and always do your own research. So I highly recommend it. So Whale's BTC holdings surged to all-time highs. So Sentiment data aggregator has reported that whales have been scooping up Bitcoin recently. According to its recent tweets, small and mid-sized wallets that hold between 0.1 and 10 BTC have increased their supply of the leading crypto to a historic peak of 15.9% of the circulating supply. And here's another chart for you. In large wallets, 10,000 to 100,000 BTC have surged in number and reached a peak since February last year. However, wallets that contain between 100 and 10,000 Bitcoins have hit a 3-year low and are holding 45.6% of the supply in circulation. So what that's telling me is that these smaller retail investors are coming in, right? They're coming in. They're buying up, Bitcoin. They're stacking their sats. And these large wallets are also coming in, stacking their just whole Bitcoins, not even sats, whole Bitcoins. But it's not even like institutions and all that. It's also countries too, as we've seen with El Salvador and that one African country. I can't exactly recall right now, but people are making big moves in this crypto winter. And so that's basically it for this article. So we'll go to the next one. All right. So Bitcoin's market cap beats JPMorgan's and Bank of America's despite market crash. So Bitcoin is beating out these big banks. So let's go ahead and look. So Bitcoin BTC has experienced increased selling pressure in 2022, a factor that has also taken a toll on the asset's value. Despite the extended capital outflow from Bitcoin, the asset's market capitalization remains superior to selected traditional stocks that command tangible real-world assets. In particular, as of October 18th, Bitcoin had a market capitalization of that amount, 374 billion, basically 375 billion, placing the flagship cryptocurrency as the 14th most valuable asset class globally. Bitcoin's market cap ranks higher than the valuation of the retail chain Walmart, which stands at 363.93 billion. Elsewhere, Bitcoin has dwarfed social media giant Meta Platforms, Facebook, and JPMorgan, which they're at 360.58 billion and 349.31 billion respectively. So Bitcoin is outperforming these big mega banks, and also Facebook as well. Absolutely dwarfed Facebook apparently, and it's showing that people are kind of storing their funds up in Bitcoin. And like what did it say? It's like Bitcoin BTC has experienced increased selling pressure in 2022. Everything is. Nothing is safe. However, Bitcoin has been steadfast, and yet again, like I said, it's beaten out these big banks and Meta. I mean, people see the potential with cryptocurrency, and you can see the list right here. And furthermore, Bank of America, which ranks in the 31st position, trails Bitcoin with a market capitalization of $278.82 billion. So here's Bitcoin right here, and there's Walmart, Meta, and the Palladium, and Visa is still like up ahead of Bitcoin, but that'll change in the future. Not a financial advisor, but gold, it'll talk more about gold. Let's go ahead and look down here. What? Okay. Indeed, Bitcoin's valuation has dropped from above 1 trillion when the asset peaked in late 2021. The valuation pushed Bitcoin to rank globally among the top 10 most valuable assets, right? And I believe that Bitcoin is trailing behind of gold by 10 trillion. So, I mean, there's still room for improvement, but, in due time, we may or may not see. We'll have to see, of course. And there's just like a bunch of blah, 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 blah. Yet again, these news articles are in the description if you need them. So I'm going to go ahead and move on to the next news article, right? So Cardano Network transactions record 75% increase as activity skyrockets. Details, all right? So let's go ahead and look at this. So the Cardano blockchain has experienced an explosion in network activity. On October 19th, network transactions rose to 97,959, the highest since the start of October, according to Cardano Scan. This represents a 75% increase on a month-to-month basis. So that's pretty bullish if you're a Cardano fan, right? Well, let's continue. It would seem that's a part of this really cool NFT/GameFi project on Cardano called like Official Makasi. I know I'm going to be butchering all these Cardano names. They always name stuff pretty, archaic, right? Um, and then there's all these NFTs and charts. Like I said, links down in the description. NFT volume hit 3.0 million, 3 million and 2.8 million ADA on 17th and 18th of October, respectively, solidifying Cardano as the third largest NFT protocol on OpenSea NFT. All right. So Cardano now ranks among the top 3 NFT chains, according to OpenSea NFT data. NFT volumes hit 3 million ADA and 2.8 million ADA on October 17th and 18th, respectively, which placed Cardano as the third largest NFT protocol. And this goes in further. Okay, this is the real data about volume in NFTs by blockchain. Interesting. And it shows that 24-hour NFT volume right here, I would assume is like 1,200,000, and it's only trailing behind Solana and Ethereum, and it's definitely ahead of Immutable X, which is supposed to be a blockchain for NFTs, and Flow and BNB and Hedera. You get the point. So Cardano ranked ahead of Immutable X in the last 24 hours with 1.2 million traded in NFTs, trailing only Ethereum and Solana. The impact of the Vassal update, I know I'm butchering it, is seen as Cardano dApps record significant increases in user activity, as reported by U.Today. Cardano DEX Wesley Swap recorded 788% growth in user activity over the last 30 days. So 788% growth in user activity over the last 30 days. Oh my goodness. Now, if you're pretty bullish on Cardano, this is just great news for you, right? There's this, that, and the other, but then there's this NFT space on Cardano, which is beating out like projects that were specifically built for NFTs. And that's got to be some great news, especially after the Vassal update. I'm sorry if I'm butchering that, but yeah. Let's see. However, the DeFi ecosystem has seen in the TVL, remains unimpacted. This might be partly due to generally poor DeFi sentiment among investors. Cardano's TVL is down nearly 6% in the last 24 hours at 62.25 million, which is to be expected with TVL. Everybody, everything's going down. Nothing really is like staying around. I mean, relatively in the crypto space, but like crypto space with other traditional finance markets, I mean, crypto's not doing so bad, right? So Suraj, I probably butchered that name, an analyst at Orbis, predicts the rise of Cardano DeFi. The NFT volume on Cardano is amazing. But wait for the DeFi stats. When the real behemoths of DeFi protocols go live on Cardano, this winter may be bad for the markets, but I have a feeling that this winter we will see the rise of DeFi in Cardano. So if you guys are Cardano fans, let me know down in the description. Just tell me what do you think about the project and what do you think about the future of Cardano. And that's enough of this news article now. Now we're going to go to the next news article. So, Japan to revitalize crypto sector by letting exchanges list coins without strict screening. So Japan is aiming to further relax cryptocurrency regulations by making it simpler to list digital assets, which might enhance the country's appeal to leading crypto exchanges such as Binance, among others. The governing body of crypto exchanges intends to let them list cryptocurrencies without requiring them through a rigorous screening process, typo, according to new documents Bloomberg reported on October 19th. The most lenient regulation may go into effect as early as December. As a change away from the regulatory tightening that occurred a few years ago, Japan is becoming more proactive about the process of revitalizing its cryptocurrency industry. The largest digital asset exchange in the world, Binance, is applying for a license to operate in Japan 4 years after it withdrew from the market there, in part due to the government's shift in policy. So, we all know that Japan has always been kind of tech savvy, and they did, like a few years back, release some of the harshest stuff for cryptocurrency, but now they're trying to reel it back and, give these exchanges another chance to come back, I guess. I guess they realize they messed up. I don't know what to tell you. But I guess they're also seeing like some of their big gaming companies, as I had in the video yesterday. For instance, Konami. Konami is having its own blockchain integrations, right? So I can see this where, you know, these new startups, as it says right here, like making it easier for startups to compete with more established companies. So more startups will start up in Japan, you know, and then boom shakalaka, you know, more hands in the pie, more hands in the crypto sphere. So, all right. I mean, that's basically it for that. There's a lot more. There's a lot more, but like I said, links are down in the description. So let's go ahead and go to the last bit of news. So, Aptos airdrops 20 million tokens to early testnet users. The Aptos Foundation conducted a retroactive token airdrop overnight to reward early network participants. The foundation allocated 20.1 million APT tokens as an airdrop late Tuesday Eastern time, right? Representing 2% of its initial total supply of 1 billion APT. These tokens had a value of $200 million to $260 million based on the token's market price shortly after the airdrop opened. Down too low. All right. So a total 110,235 crypto addresses on Aptos were eligible to receive the airdrop across two categories. This first category included users that finished applying to the Aptos incentivized testnet, and these users can claim 300 APT tokens. The second eligible category consists of users rewarded 150 APT tokens for minting an Aptos Zero NFT on the testnet. And Aptos raised $150 million in July. Aptos' proof of stake blockchain leverages the Move smart contract programming language, claiming to offer high performance. Now, I mean, this is what I've seen in the news yesterday when I was reading through it. Of course, it dumped because there's people just, when they get the tokens, they just want to sell, right? We get that point. But also, I heard, well, like the transaction speed is supposed to be 160,000 transactions per second, but yesterday it was only 4 transactions per second. I mean, don't get me wrong, like it just launched, so, and plus it doesn't really have that many projects or released any projects at all on the blockchain, so you got to give it the benefit of the doubt here, but you know, it's looking like an ugly start. But you got to wait and see, you know what I mean? So, for the airdrop, the Aptos team did not implement any mechanisms to remove airdrop hunters or Sybil users, people who interact with crypto projects solely in the hopes of claiming future airdrops. Such hunters do so by creating many wallet addresses that perform one transaction on these projects so as to qualify for any future retroactive airdrop from several accounts. These airdrop hunters often sell the tokens immediately upon receiving them, an action that can drive down the price of the coin. The airdrop came after Aptos announced details of the APT token distribution and provided clarity for the first time on how many tokens will be directed to each of the project stakeholders. The initial total supply of the Aptos token will be 1 billion tokens to be distributed between investors, the Aptos Foundation core contributors, and a community pool. And the APT token traded down 40% after the token was listed on exchanges, dropping from $13.70 to $8.3 at the time of writing. Currently, Aptos has a fully diluted market capitalization of $8.3 billion. Now, you guys got to remember, this is the initial total supply of the Aptos token, which is $1 billion, but they can mint more tokens, apparently, from this article here. So this is what it purports. So, I mean, I don't know about this Aptos token. Maybe it's the future. Maybe it's not. And it's made from ex-Meta developers, or like it was founded by ex-Meta developers. So, I mean, you gotta kind of bob and weave with it, right? You gotta bob and weave with it. And I did not know there was 1 billion of those tokens. So, I don't know. And that's only the initial total supply. I like mid to low supply tokens, but I'm not a financial advisor or anything, and we'll have to see how this Aptos project goes. But that's all the news I had to share with you today. But what do I know anyway? I'm just keeping you up to date on the down low, so I guess I'll See you guys later.